When I first started trading, this is literally what my charts used to look like. And looking back, and I used to think all the time, like, why can't I get this right? Why am I failing at trading? Why is the market always going against me? I used to be scared to enter, and I was never confident in my strategy, and I was never confident in my levels because how could you possibly be confident when you trade like this? And the reason that I wanted to show you this is because as human beings, when we do pick up trading and we start trading, we always want to overcomplicate things because we're scared. We want to protect ourselves from risk, and we chase certainty in the markets. And the one thing that trading will never give you is certainty, ever. There's no guarantees that a trade's either going to work out or it's not. There's no guarantee that the market's going to come to your entry. Nothing at all. Trading is literally a game of probabilities. And when we have a loss, we like to go online and we like to research and find out more information because we think the more information we know, the better we can protect ourselves. And the more stuff we add to the chart, the more indicators, the more protected we'll be. So, for example, this is literally how I used to trade. I used to have the MACD, I used to have 3 EMAs, and these were my support zones. They weren't even zones. I used to draw them on every single high and low candle. So when price would go up, I would freak out and think, oh, well, I can't enter. What if it breaks through this level and goes to the next one? Or when it's going down, it's like, oh, what if it doesn't bounce off this level and it goes to the next one? And I would just sit there on the 15-minute chart because I thought you need to have more trades, more indicators, everything like that. And I would sit there. And when price would hit one of my little levels, I would freak out and I would think, oh, maybe it's going to go to the next one, or maybe it's going to break through, maybe. And I could not enter because my strategy would be wait for a 20 and 50 EMA cross above the 100 EMA, and then the MACD crosses the zero line, and then price is bouncing from the support level on the 15-minute chart. And I traded like this for ages, and every time I did enter, the price would go against me because I had no idea what the actual trend of the market was because I was so zoomed in on here. I was so focused on the 15-minute that I couldn't see. Like, for example, right here, I would be like, oh, well, price is in an uptrend now, so I'm going to long. But in reality, price is in a downtrend. But I was so hyper fixated on these levels, and I just kept adding more and more and more and more and more, thinking it was going to protect me because I craved certainty in the market. And as new traders, you want certainty, you want guarantees. As humans, we want to win, we want a good outcome. You're grown up around it, like with sports and everything like that. You're programmed to want to win. And it's statistically proven that when you have a loss, you feel it twice as bad as what a win feels like. So losses hurt way more than a win feels good. So we try to overcomplicate it. And a lot of stuff online preys on this because it will, you'll see video titles and it'll be like, my strategy that made $50,000 a day. When in reality, the strategy is only 10%. And this overcomplication that I used to do on the charts has nothing to do with strategy. It's all psychology because I wanted to control the market. I wanted to predict the market. I wanted to see where the market was going to go. And I needed guarantees and I needed safety and I needed to win every single trade. And I could not whatsoever handle a loss. And then I got scared to enter and all that other stuff. And when it all changed for me, trading especially, it was when I mentioned previously that I took a break for a little bit. I came back and then I just reassessed what I was doing. And then I got rid of everything. And once I did this, that was what changed trading for me. When I got rid of all of these lines, when I got rid of absolutely everything. So if you I removed everything, remove all the indicators, because the indicators are just telling you the same thing that price action is. And then I just started moving from the lower time frames, and then I moved up to the higher time frames, and I just got a better picture of everything, and I just felt so much more calmer in trading. So, jumping on the daily, and I really understood what support and resistance was and what a swing high is and a swing low. And I didn't have a million different support and resistance lines where it got to the point where I couldn't even enter a trade because I didn't know which was an actual support zone and which was an actual resistance zone. And I just practiced drawing. So I would find the swing highs, for example, right here, and I would mark it up, and I would mark up a support. I'd then go and I'd find a resistance zone, and I would mark that up. And then I would just set an alert at support, and I would set an alert at resistance, and I would walk away. And that was it. And now it just makes things so much clearer. So here you can jump on the charts here and you can look and you can say, okay, this is a major support zone. I'm going to trade with the trend. Price is moving up. Now it's ranging. I'm going to enter, because the more simple it is, the better your trading will be. The easier it will be to enter, because there's no guarantees. And the more you try to make the market do what you want it to do, or the more indicators and lines and graphs and all this stuff you draw on the charts to try to sort of predict or get some sort of guarantee from the market or some certainty, the harder you're going to make it, the more difficult you're going to make it. And realistically, like, don't fall for these super complex strategies. All this stuff where it's like you've got to wait for a 20 and 50 EMA cross with the MACD crossing the zero line with a break of structure, inverse, fair value gap, Fibonacci, liquidity sweep, whatever that stuff is. Like, don't worry about it. It's only going to overcomplicate it. It's going to make it more harder for you to make decisions, because trading is already a high pressure environment, and it's already hard enough to enter into a position rather than complicating it and making it so much harder. Like, looking at these charts, it's just so clean. It's just so simple. You don't need 100 different zones. You want to draw your zones where, price is respected and bounced away. You don't want to draw a zone every single time, price makes a little move and then it gets chopped through. Like, if you were to draw a zone here, price chop through, chop through, chop through, chop through there again. So just keep it simple. And once I did this is what turned me profitable. Like, in all honesty, like, this is all I did. I went from having those super cluttered, super messy, crazy looking charts that had a line at every single candle, wick and body and all the EMAs, and I was trying to get, so many things to align. And how often is a 20 and 50 EMA cross above the 100 with the MACD crossing the zero line, lining up with the Fibonacci? Like, I look back at like notes that I used to have and I don't even understand what I'm talking about. And then I think, no wonder I was struggling so much. And you will have the urge when you lose a trade to want to add another indicator, or when you're on a losing streak, you're going to want to switch your strategy because you want certainty, you want guarantee, and the markets will never give you that. And, it might be a hard pill to swallow, but it's the truth. And the moment that you accept that, and the moment that you start making everything more simple and just managing risk, the better your trading will be and the easier it will be for you to enter into positions, because you won't have a million different, indicators going off, and, you won't be sitting there paralyzed because you're like, oh, well, it's saying buy, but the MACD or the RSI hasn't given the right indication to enter now. So I can't enter. And then the market starts moving. So then you feel FOMO. So then you jump in late and then it has a retracement, but your entry is not where it should be. So it hits your stop loss and then you feel annoyed. So then you start revenge trading and you're trying to get that money back. And it's just a flow on effect. And it just, it's like a snowball and it just gets bigger and bigger and bigger and bigger and bigger. So just keep it simple. This is pretty much everything I did. Like, this is all I did. I just took something that I was trying to make so complicated because everything online said, you need 150 different confluences, and they, give you all these very, complex strategies. And they always say, oh, these simple strategies, they're no good. They're no good. But reality, it's not the strategy that has any predictive power. It's just a way for you to manage risk. And that is it. where, simply here with a support and resistance strategy, you can easily say, if I enter here, if price breaks down here, makes a new low, then this range is broken. It's now in a downtrend. And then I'll wait for price to come back up and I'll enter into a short position. How easy is that? The strategy is the easy part. It's just the mental side. And the psychology is what's going to make you want to put all these indicators on there, add all these extra lines and confluence and all this stuff that you hear about online, and you don't need it. You really don't need it. You need to keep it as simple as possible, because the mental challenge that you deal with day in, day out when it comes to the charts is already hard enough, and you don't need to make it harder by having a very, very complex strategy. So this is literally all I did. This is what changed trading for me. This is what turned me from unprofitable to a profitable trader. This is it. Making it simple, making it easy, making it a process that I could follow on repeat without question. I don't even have to think. I can literally just look at the chart and say, okay, price is in an uptrend. When it pulls back to support, I'm going to go long, put my stop loss below the last swing low. So if it does hit there, then it's now in a downtrend and the trade's invalid. That's it. Or price is in a range. If price makes a new low, trend's invalid. Whatever it might be. Like, just, you should be able to explain your trading strategy so simply. And it should take you a sentence to explain how you trade and what you trade. So just keep it simple. And this is literally what turned it around for me, because I was very unprofitable. I was losing thousands and thousands and thousands of dollars. And looking back, you can probably see why, because my charts were that cluttered. Had no idea what I was doing. Keep it simple and manage risk. Thank you for watching.